Hey, happy Saturday to everyone. Hope you had a great Thanksgiving, got to spend some time with your families, and hope you had a great week trading. So, we're going to go over how that week went and what I'm expecting moving forward as we get into the new week. But first, disclaimers. This is not investment advice. These are my opinions. I am a trader, no more. I'm not an investment advisor. These are just things that I look at, and hopefully you might be able to incorporate them into your routine. At the end of the day, though, you need to trade your own convictions and analysis and do your best. I am frequently wrong, and it's okay to be wrong. It's trading. It's hard. Okay. Now let's start looking at the SPX chart. Friday was ugly, unless you were short. But we did about 2.25% on the SPX. I believe NASDAQ was down about 1.8, so a little less so. This was all due to new COVID fears. A new strain of the virus has popped up in South Africa. I think we all know that. I don't need to talk about that. But one thing I will say about it is you'd think that the market would be sort of used to it. It's been going on since last February of 2020. So not a lot of mystery there. But every time the market gets sort of overbalanced to one side, all it needs is a little push. Here we are. There's not a lot going on. There's not a lot of no earnings. We're past earnings season, and this is typical. So we're getting a pullback. How far it goes is up to the big money. It's not up to us. So we should be trading carefully. I'm going to go over what I'm looking at here. So as you can see, we've kind of played around in this range for a while. This is a daily chart. A lot of people are calling for a pullback up here. I don't like that view. Let me zoom out a bit. A lot of people have been calling for a pullback all up in here, but as you know, the S&P is a beast. It does not turn over easily, but when it does, it can be pretty fun. Now, if you see what I've marked here, these are the December options on SPX. I find those to be very important to keep an eye on, the heaviest open interest levels. The call side was really easy. It sticks out on the page. 4,700, highest open interest by far of any call levels. The put levels were a little more difficult to read. I went with the closest to market price. Let me go look at that. I'll pull it up for you so you can see it. First off, I'll show you that 4,700 level, 61,000 contracts. This level was getting tagged pretty hard when we were up high. It seemed like, especially on like the Monday, Wednesday, Friday options, people were just hitting those things like crazy. More so on the SPY because I think more retail traders trade SPY. So what you're seeing when we had that upside volatility the previous couple of weeks was you walk in on Monday, Wednesday, Friday morning and see that, the volume on the 470 calls it was incredible. And so, we tended to see it kind of stick around there. But anyway, the more importantly, you should be watching these big expirations, the monthlies. And that's what I'm looking at here. This is the December 17th. We've got 20 days to expiration right now, or 19 is what this is showing. Now, what I saw was odd about the put side was this. All right, 4,500 has a decent level of open interest, 40,795 contracts. But you flip over to the call side there, 49,247. Same thing goes for the 44s. The 4,400 is showing 51,000. Still a pretty good call open interest too. So I think these levels are going to be extremely important if we continue to drop. If we don't continue to drop, doesn't matter. Now, the biggest put level is way down here at 4,000. I'm going to ignore that. That is actually the largest open interest. That would be the main support for the market, essentially. I just don't see us going that far. 700 points off of the highs would be a pretty big move in the next 19 days. But anything's possible. We saw it last year. So you can see that's those two areas. I went ahead and marked the 4,400 as my primary. I try to stay as close to market price as possible, even though that's not factual, as we just saw. There's twice as much open interest way down here at 4,000. So keep that in the back of your mind if things get hairy, which I don't think they will. I actually think that the market will get picked up somewhere in here. I'll show you why. Now, I'm going to zoom out a little bit. It makes this chart look a little convoluted, but now I'll zoom back in. So if you look at these spots where the market gets way too far ahead of it, this is obviously an uptrend. We're above the 50-day moving average. When we get 5 to say 7% above these 50-day moving average, we tend to get these pullbacks. It doesn't always happen. I wouldn't mark that down as a timing indicator, because there are plenty of times where you could just say you're trying to short it back to the 50. Very frustrating for you up here, and you're missing out on a lot of trades. That's the main thing, is being stuck in an opinion, or a short position when the market, just because you think, oh, it has to pull back, is very frustrating, because all along the way you're missing good trades, on the long side. Wait for it to roll and then become a bear. Don't sit here and try to time the top, is my point. But anyway, as you can see right here, I don't have it marked on the chart, but we were 5.1% away from the 50-day moving average, which is, historically, as you just saw, a good time for a pullback. Now, as we start dropping, if we continue dropping, which I believe we will, because I just don't think the panic's worn out. I think retail got really involved. Myself being retail, I was buying up here. I think retail got really overloaded, and retail's quick to move. They're what we call hot money. They'll sell as soon as they have a reason, and COVID tends to be a good reason, I guess. If you look back at last year, COVID was a really good reason to sell. Now, I don't know that it still is, but I think the people might regret in a few weeks, but we'll see. I could be totally wrong. Now, on the way down, if you're short, here's some levels to look at to maybe take some profits. There's some gaps here that were continuation gaps. Those aren't high percentage plays as far as, waiting for a gap fill, because typically these continuation gaps have a pretty low percentage of being filled. But now we're headed back toward them, so here you go. Now there's some right here. I've got one marked at 45.20, 44.88. As you may have seen earlier, 4,500 was a level of interest on the options market as well. And then below that, 44.39, we got our big put level that I talked about. So all these levels are going to be very important on the way down. So if you're short, maybe take a little off in these areas if you want, or you can just go hard in the paint. That's up to you. If you're buying, if you're looking for a Santa Claus rally buy level, these will be good to look at. I would make sure that you're hedging yourself, because these drops can get out of control, and some of these tight stops that you might use back here will not really work as well on these panic drops. Okay, so use puts against your longs, cheap puts if you can, 0 DTE, 2 DTE, whatever. Just cover your bases. Don't lose a lot of money. Okay. Because the main idea is to maintain capital, right? We're trying things out, trying levels out, put a stop in. Obviously, as I said, they're going to need to be a little wider on these panic drops. So you need something to make up for your losses that you might take as you try it. Now, that's a daily chart. I will show you something that was obvious, where it became obvious to me that things were turning. You see, this is a 10-minute aggregation. Now what you saw, anytime it was dipping on this 10-minute chart, like here for instance, you get these V-shaped recoveries. Okay, here's another one. It's dropping, bears getting excited, boom, back up to where we were, just like that. Boom, boom. All right, now one thing I look for to determine a trend change, and we all know this doesn't roll over easily because it's a beast. So you start seeing W's instead of V's. We're just seeing this form up now. So here again, the V never revisits this low point, right? So you had one opportunity to buy basically, and then you hold and you make a lot of money. Well, when you start seeing those lows get retested as they did here, that could be a sign that maybe we're about to roll and you need to be a little more vigilant to where you're not, okay, look, I'm buying here and holding. Well, look what happened if you thought, okay, I'll close the computer, I'm good, hold that until Christmas. Whack, there goes your stop. So start watching these. When we're in a downtrend, if we are actually in one, you'll start seeing these W's show up. And a lot of times they make for good little day trades, but they're really not great for holding, as we see there. Hey, we had one here. I bet you that gets snapped. But they're pretty fun to trade in the sense that if you're smart about it, you're not just trying to buy the V's anymore. You're trying to buy the W's. You wait for the retest. It gives you a pretty high percentage, low risk trade because you can just buy somewhere near the previous low, maybe below it if you're really smart and patient. You're buying actually the little stop run here. You see that how it ran below, picked up those stops right there. That the guys who bought the V, they put their stops right there. Okay, well, this is a liquidity spot for the market makers. Okay, they can give other buyers liquidity. So by running your stop, so what you're looking for is the second move down. Okay, and you can catch a little buy there with a stop somewhat around here, and then ride it up to whatever the next resistance level and get out, or try to hold it if you think it's bottoming. That's your thing. I don't think it's bottomed yet. That's up to you. I think we're going to have a little more downside. And so there's going to be plenty of opportunities for trades both ways. If you're a bear, you're looking at these moving averages and just waiting for the price. Be patient, get there, use a stop, hedge with calls, so on and so forth. But there's going to be a lot of good choppy trades here for the next week, I think. So have fun with it and protect yourself. That's it. Good luck to everyone. Have a great week.